what kind of questions that you expect Warren Buffett to answer during the meeting?
Well, I noticed that the art for the Berkshire tag, it looks a little bit like the 70s.
Yeah.
And I suppose that means that they feel like the market environment is like that. So they'll be talking about commodities and inflation and about lower growth of expectation, lower, I suppose, lower returns moving forward. And I know Mr. Buffett and Mr. Munger have said lower returns often,
Yeah.
and it wasn't the case. But if it looks like it's lower returns, I'm sure they'll say so. And I'm sure they'll get a few conversations about the banks. I think PacWest was down 45% today, and I know Mr. Diamond said that the bank run was over whenever they picked up First Republic, but maybe it's not. There's many questions about deglobalization coming his way, about the world maybe not working so well together.
Anything around the banking crisis. I'd love to hear more detailed thoughts, more depth.
Yeah.
Why sell the banks? Why focus
sure.
on Bank of America? More of that rationale. And then oil. He's made such a large investment in Oxy and Chevron. I understand, he's talked about their share repurchase. He's talked about how he thinks Vicky's a wonderful CEO. I'd love to hear a lot more detail on his views on oil.
Okay.
The debt ceiling, what's going to happen on June 1st if that isn't addressed. Obviously, the recent issues with the banking system and whether or not we'll see more bank failures down the road. And then just general conversations of as far as the markets, where the opportunities are today, and the general state of affairs.
I would just like to dig more deep into their thought process and into the criteria on how they evaluate which business is solid and which is not, and how do they think about capital allocation in the current economic climate.
Sometimes a little redundant, but I like listening to the good old lessons over and over again. I think it just kind of reinforces values, and so that's kind of usually what I come for. Emotional based, I think, investing tips. Just kind of, we're feeling like a little bit of apprehension about the next 6 months, and just kind of reinforce, stay true, and kind of go with the flow kind of ideas. And so I hope to get a little pep talk maybe out of.
Yeah.
Well, so I'll start. I think it's interesting. I thought he answered a lot of questions last year, but he did go on for a while on certain issues that were important. I think this year there will be continued questions around his investments, Taiwan Semiconductor, what's happening in his oil and gas companies from a renewable standpoint.
So what kind of key factors that you've seen or you're considering this year?
Fixed income today is a lot more attractive than it has been in quite some time. Treasury bills are yielding about 5.2% if you buy a 90-day T-bill. A lot better deal than we've seen in quite some time. Now, investors had to deal with a lot of pain in order to get to where we are, and the broader bond market had a 5-year period of negative returns, and so I don't think people are wildly enthusiastic about bonds yet, but I do think from a risk perspective they're as attractive as they've been in a long time today.
Well, I suppose like a lot of people, I've been watching the Fed and wondering what will do well in a there's a high risk free rate, and I grew up.
What do you think is the biggest theme of this year?
It's a tough question. I think it is. It's banking crisis.
Yeah.
It is continued kind of COVID unwind, natural resources and oil underinvestment.
Looking for good cash flows, strong economics, looking for tried and true industries, and we're not looking for fancy stuff, things we like, brick and mortar stuff that's going to be around for the next 100 years, those types of things.
So again, if you look forward and if you assume that the economy will start to pick up momentum, then I think you have to look at consumer stocks. I think you have to look at some of the industries that have been shunned in this quote recession, like home building. So if you assume that rate increases pause and or start to reverse, economy's strong, then I think you start to think, a year or 2, 5 years from now, the consumer is going to continue to drive the U.S. economy. That's 70% of our GDP.
Exactly. What kind of advice you will give to other investors in the next 6 months or 1 year in terms of the investing, any risks or opportunities that you have seen?
Sure. So I think the risks are the financial system continues to see the strain that we've witnessed in the last couple of months. So I would be cautious as far as making concentrated commitments to banks. You know, they have come down a lot from where they've been, but you know, the bottom may not be in yet. So I'd be cautious on that front.